finish it off, let's also talk about the real money account, where I had the bots running with real money. I just did the analysis of the 1 million demo account on the bot portfolio, and before that I did the 1 million demo manual trading analysis. So this is a real money with a bot portfolio. As you can see, the numbers resemble, of course, the demo account, which is not surprising. Again, we used minimum risk parameters here, okay, very, very low risk parameters, but that looks good, okay. So the total net profit is higher than the maximum drawdown. Maximum drawdown was 1.29%. The win-loss ratio is 67.12%, so a bit better than on the demo account. The trade frequency is somewhat higher. The average profit trade is also a bit lower than the average loss. However, when you see like the maximum consecutive wins are 16, which is good. Also the loss is 16. So expected payoff 4.38, profit factor 1.38. And also here we have the drawdown, interestingly, like we saw on the other two, followed by a recovery. So the highest point in the account curve was up here, and then, you know, a bit of a drawdown followed by a recovery. You see, there's a good chance that we get a similar market phase like the one at the beginning. So the curve would again go up here. That's what I would expect. And it's very stable. I'm very happy with that. The drawdown is very manageable, and everything is very balanced, which isn't a surprise because all strategies use the balanced stops. They are rather low frequency strategies, so they do not have over weekend risk. All trades are closed on a Friday, which is what happened here as well. So, you know, there's no gap risk, and also it's active during all the news, including FOMC, yeah, and still it's stable. So these are good values. These are the 6 main bots. As you can see, the more strategies I develop, the better also everything can become in the next years. And if I manage to keep this beautiful curve up, sky is the limit. So take this, please, as an inspiration for your own trading, whether it's manual or automated. It comes down to the same principles in terms of risk policy, risk per trade, covering your downside, being selective with trade setups, having the discipline to let everything play out, always being in control. Okay, the truth is professional trading should be rather boring because there are not massive swings in your trading. That's the truth. If you are trading, if you're risking too much, okay, and you're gambling and you're excited, that's a wrong sign. You're doing things wrong, okay? Let me clearly say that. All right, if it's a controlled activity and you also have, you're losing days, losing weeks, but then you come back the next week, then you're doing things right. You're not trying to win everything in one go, okay? You're trying to run a marathon, okay, to perform well overall. That's the key, okay? Stability is key in this game, in this business. And let me tell you, if you are able to maintain stability in your trading, then you come to a point where sky's the limit, where you can collect capital, where people want to work with you, where people approach you, okay, where maybe hedge funds are within reach, or, you know, prop firms or whatever it is. You know, there are many possibilities these days regarding that. So I hope you like what I show you here, and as you can see, I did a lot of work for you about the market causality, about trading in general. I wish you all the best.